All right, everybody, it's me, Gregory Mannarino. It is Sunday, July 12th, 2020, and this is my newest segment of Markets Look Ahead. It's going to be a big one. Let's talk first a little bit. If you recall, if you subscribe to my free newsletter, again, there is a link in the description of this video. You get a lot of inside information to this market, and about 99% of it has proven to be 100% correct. Don't take my word for it. I have over 30,000 subscribers so far to my free newsletter. Ask any one of them if they believe that my free newsletter is worth it and the data is accurate. Not one will tell you that it has not been accurate. In fact, so much so that it's frightening. Now, several weeks ago, back in June, I explained to those of you that follow my newsletter, watch for July. This market would move higher. Well, that's exactly what has happened thus far this month. Now, this is important. We are now going into earnings, okay? This week, as a matter of fact, and there's all kinds of calls from the mainstream financial channels. They're talking about abysmal earnings, the worst since the meltdown. And there's no doubt about it that is true. But again, Wall Street, you have to understand how Wall Street works. When Wall Street realizes something like the environment we are in, it prices it into the market. And as you well know, we've hit record high after record high after record high with regard to the NASDAQ. So earnings are baked in. Abysmal earnings are baked in. So what does that mean? Is it going to turn out to be, a buy the rumor, sell the news? This old Wall Street adage? I don't think so. For several reasons. I believe that this is what they're going to float out. All right, so listen for it. Earnings are terrible. They're miserable. But you know what? They're not as bad as we thought they were going to be. Boom! There goes the stock market. In my opinion, right now, and I'm going to talk more about this in a second, the pawns are lining up for the stock market to gain, and probably gain substantially. Is there the chance that something could come down the pike here and push stocks lower? Of course there is. But again, let's put this together. Let's look at the 10-year yield. Okay, you all know how important it is. As a matter of fact, I wrote an article. It's going to come out in the New Trends Journal, which goes over my fluidity of money theory, which I discussed, years ago. So if you subscribe to the Trends Journal, you're going to get to read a really interesting article on that theory. And it's more than a theory. Again, it's understanding the dynamics of where and how cash moves in the market. And again, if you do subscribe to the Trends Journal, which I do suggest all of you do, you will like that article. Anyway, so let's talk about this. The 10-year yield, if you notice, yeah, sure, it's been hovering around 0.6 or so. We did drop below that, but again, regardless of that 10-year yield, we're getting record high with regard to the NASDAQ, and we know why. I explained to you weeks ago. I got a little inside information that I shared with all of you. I explained to you that the major Wall Street banks were buying the market. At the same time, if you noticed, they were floating out stories. Be cautious on the market. Be careful. Again, it's what they want is they want people to dump their stocks while they get in here and buy it. So it's a game. They rig it. They manipulate the market via the mainstream media. They tell you one thing. Meanwhile, they're in here buying the market. So are the Wall Street hedge funds. And it's not going to stop. Understand. They have access to literally unlimited funds directly from the Federal Reserve, the major banks which run the Fed, and the hedge funds. They're getting cash from the Fed. The Fed has a trading desk. The Fed is buying the market. Period. That's the environment we are in, and that's why stocks are gaining here. Okay, it's no secret. It should not be a secret to you. Now let's talk about the dollar. Okay, the other really important aspect of this market. We've seen the dollar fall under some pressure lately. We're not getting this big knee jerk into the dollar, which would tell us, hey, you know what? The market's going to fall. Absolutely not. So again, you look at the 10-year yield, you watch the 10-year yield, you observe it. Same thing with the dollar index or the Dixie, and you are going to know more than likely, I mean, with a high degree of accuracy, where stocks are going to go. And that's how I've outlined this for all of you. And it has proven to be 100% correct. I'll tell you something else. And I've outlined this, and I want to say it again. Go back to my free newsletter, the over 30,000 people that subscribe to it. I post every single position I am in, when I bought it and when I sold it. It's been up there for months. I have posted dozens and dozens of positions. Not one realized loss. Not a single loss. Again, that is astounding. And again, don't take Greg's word for it. Go subscribe to my newsletter and ask anyone, hey, is Greg telling the truth? And they're all going to say, yeah, it's pretty mind-blowing, but it is the truth. So again, going back to this market, let's talk about the next important factor here. It's crude oil. Crude oil has been doing exactly what I said it would do, and we're not done. They're going to bid it higher. By bidding crude oil higher, it boosts the energy sector. It boosts the financial sector as well, pulls the whole market with us. This is where we're going. I want to share this with you. Last week, I ran a poll on Twitter. Basically, well, it was, are stocks going to be higher or lower a month from last week? Okay. 1,176 people have participated in this poll, and I get a lot of people that follow the market, and they know the market very well. So here is the results of this, and I want you to pay attention to this. 36.8% of the people said it would be lower. 36.8% said lower. 57.7% said it would be higher. 57.7% higher, and 5.5% were undecided. So what does this tell me? Okay. The fact that we still have a high percentage of bears here, almost 37%, and about 50% saying higher, tells me that this market has room to run higher. If we had an overwhelming amount of people saying, oh, the market is going to be higher, let's say 70% or above, that would make me kind of a little cautious as to where the market might go. But gauging from this, gauging from that, the market will be higher. All right, that's just the way it works. You know, the crowd is generally wrong. When you got a lot of bears, that means the market's probably going higher. When you got a lot of bulls, the market's probably going lower. But these stats tell me market's going up. And I've been 100% right here for quite a while with this. All right, so let's put a couple of other things together here. And it's going to be headline news. Listen for headline news. Look what they did Friday. All right, this is how it works. Friday, pre-market, stock futures will lower across the board. Just before the market opened, what did they do? They floated out a story. Oh, this Gilead drug, very promising. We're gonna beat the virus. Whammo! Stock futures go up, stocks finish higher. Even if there were very positive news at this moment, and it's only 7:38 a.m. Pacific Standard Time, with regard to anything, they're going to wait. They're going to wait to release it till pre-market, okay? Or maybe as soon as the market opens. They want to drive the market higher. You know this is the goal of the President of the United States. He's fixated on it. So we will use this to our advantage. You understand? We're going to use headline news to our advantage. We're going to use everything that we possibly can to our advantage. We will not let them fleece us. Period. The end. And bigger picture wise, We know what the central banks are going to do, and we haven't seen anything yet. Zero. The Federal Reserve is right now in the midst of inflating its balance sheet multiple times higher than it is now. I mean, we've seen a parabolic move. It went straight up from 4.5 trillion to 7, literally straight up. You want to see what this looks like? Go to the Federal Reserve's own website. Don't take Greg's word for it. Go to the Federal Reserve's own website, federalreserve.gov, whatever it is. Just look it up and go balance sheet. And there's a nice graph of the Fed's balance sheet. It's like higher, 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 boom, straight up. It will not stop. And I don't care if you hear people talking about, oh, the Fed is cutting back on purchases. It's a lie. All right. They can say whatever they want to. Look at the Fed's balance sheet and you will see the Fed's not cutting back on a damn thing. The Fed has no intention whatsoever of stopping its debt issuance and asset acquisition on an unprecedented, truly epic scale. And again, as I wrote recently in the Trends Journal, look, I'm very proud to be a contributor to the Trends Journal, okay? And, a lot of people keep saying here, oh, Greg's getting paid a lot of money to do this. Ask Gerald Celente if Greg Mannarino is taking a single penny to be a contributor to the Trends Journal. I am doing it for free. 100% for free. Don't take Greg Mannarino's word on it. Ask Gerald Celente himself if Greg Mannarino is being paid even a single cent to contribute to the Trends Journal. I'm doing it for free. Again, why? Because I believe that the information that I put out is critical and people need to understand it. I cannot stress to you all how much I sincerely mean that I got your back. I will never let you down. And every single bit of information that I get, again, look, I told you all, and you can believe what you want to. Greg Mannarino here, I got spies all over the place. Read The Art of War, okay? Sun Tzu, The Art of War. There's a lot of talk about spies. What do I mean by spies? All right, I have friends who work at all of the major banks on Wall Street. And I'm going to give you another heads up. You watch these mainstream financial channels, especially CNBC, I know those guys too. Won't mention any names here. And what they say and what on air and what they're doing is a lot different. I think you all know that here. And again, as long as I don't pinpoint people and call anyone out, I will continue to get information that maybe is a little, let's say, considered inside information. And I will share that with all of you, period, the end. So, anyway, I think, honestly, this video has been exceedingly important. And I want you to put together the concepts in your own head. Think about the things I've spoken about here. Keep your eyes on this market. You know what to do. Bigger picture-wise, like I alluded to, they're going to inflate. The Fed is going to continue to inflate on an epic scale. So that means you need to hold hard assets, betting against this debt, becoming your own central bank, gold, silver, platinum, palladium as well. Silver, still the most undervalued asset on the planet. There's nothing like it. Cryptocurrencies, you must hold it. Well, at least in my opinion, okay? You can have your own. And I've been getting called out with regard to cryptocurrencies since I said to buy it at 2,700 and it's like, what, 9,200 and it's going much higher. Okay, so I don't want to hear, duh, it's going lower, because I've been hearing that since, thousands and thousands of dollars ago. It's just too stupid. But that's just, I've been hearing the same thing about the market too. Oh, Greg, you're wrong. It's going lower. Oh, crude's going down to $3 again, Greg. And they've been propping it up, and they're going to continue to prop it up. This is a game. Understand it's not real. When you realize that fundamental factors don't matter in this market anymore, once you realize it's politically driven, it's the Fed here getting in here and fulfilling their destiny. The Fed was created to do what they're doing now, to be the lender and buyer of last resort so they can own the world over a century ago. All right? These are long-term plans that were put into effect before you were even born. Many years, decades before you were even born. I want you to think about that. So you think you're smarter than the Federal Reserve? You think anyone is smarter than the Federal Reserve? You think the president is going to take down the Fed? The Fed, this guy, the last two presidents, let me just say this. Obama and Trump have been the best friends of the Federal Reserve since their inception. Every president has played into it. But these two guys have vaulted the Federal Reserve to the top of that pyramid. You know, look at the dollar bill. Look at the back of it. You see that symbol on the back and that little eye, that truncated pyramid? That's the Fed at the top. And they've achieved that goal via President Obama and President Trump. It will not stop under any other person. Now, the Fed is in control. The Fed is now controlling the global markets. And he who controls the cash controls the world. You understand? All right. With that said, I'm going to let you all go. I'm going to ask you to please share this video. All right. I'm going to ask you to go look at the Federal Reserve's website. Check out their balance sheet. And with regard to the Trends Journal, ask Gerald Celente if Greg's getting paid a single penny to contribute to it. No, I am not. Okay. I know people are saying that. I've read it. Oh, Greg must be making all this money. Zero. Okay. Zero. So the secret's out. I'm making nothing. Don't believe me? Ask Gerald Celente himself. People, I love all of you a lot. That's the truth. And I will see you in the morning, and it's going to be just lovely.